Hey, so it's great to have 4 frenemies on stage. Would you like to introduce yourselves quickly, or do we need to?
Pat Sheedy, CEO of Milestone.
Sorry. Bill Wolf, Lobo Leasing.
Crispin Maunder, Lease Corporation, LTI. Yep.
And I'm Stephen Cook from Macquarie.
Great.
Very horse sounding cookie.
I've just been at Mardi Gras. If any of you have ever been to Mardi Gras in New Orleans, it's a full-on event. It's a marathon over about 3 or 4 days. So if I don't have much of a voice left, I apologise. It's not the coronavirus, okay?
Okay, every year we start by asking you to score the year before. So out of 10, what are you going to score 2019?
I'll kick it off. I mean, we usually give the stock answer that it's a 7 or an 8, and it can get better, and we're on the way up. I mean, I think this one in context, I think about it where we were sitting here at the start of 2019. And from a Milestone perspective, I mean, the big issues we were looking at was we double-digit 225s in the ground, but not really line of sight where to put them. Our biggest customer at that stage, we were pretty certain was heading for a restructure. We'd lost our CEO and our chief operating officer. And things were less than certain, shall I say. So I think when I look back now as to where we ended up, and we transitioned 12 of those 225s, they're out on lease now in alternative emissions to oil and gas. We navigated through the restructure process with Bristol, I think, pretty well, and we backfilled most of our management team with internal promotions. So I mean, I think in that context, when we were looking at where we were, it's a very good year for us. I mean, it's got to be a 10 out of 10 in the context. But then, you know, general market view, I think we're still bouncing around the 7 and hopefully on the way up.
Bill?
So I'm going to bifurcate it. So for Lobo, it was an 8-9. We bought most of our assets in 2014, and so in the world where it was mostly 5-year leases, that meant 2019 was going to be a lot of remarketing. So we were busy, and we were successful in remarketing everything. For the industry, and I'll do a Spinal Tap reference, it was an 11. And here's why: because reality came into the industry. A lot of restructuring happened, and our view has always been the most dangerous thing for the industry is for people to be unrealistic about where things are, and we think that restructuring is started us on the path to stability. So the industry was an 11 or a 10. I'm again making a bad joke about Spinal Tap. Go ahead.
Well, from our point of view, I think last year I had a 7 because I'm always rather conservative. But I mean, from LCI's point of view, it was about a 9 or a 10, to be perfectly honest. We're much smaller than Milestone, and now a bit smaller than Macquarie, but we had a very, very busy year. We increased our owned portfolio by 15%. We added 34 aircraft under helicopters under management. We had about 8 transitions, which went pretty smoothly except for 1. And our average downtime non-revenue between the leases is about 3 weeks, which I think is good. We've had certainly a much, much better year than I thought we were going to have. A busy year altogether.
Well, I'm obviously life's tougher for me than for you blokes. I asked John Pekovic this question, and it's not going to be a surprise to you that he told me he thought the team, and he in particular, had performed to a 9 plus. Macquarie has a 31 March year end, so it's bonus period. So I'm pretty sure Pecco was taking advantage of the question to get his message across. Yeah. To me, obviously we stepped into the Waypoint assets, or 123 of the Waypoint assets in earlier last year. We've done a lot with that. We've been able to restructure the team. We've been able to put the teams together. We're happy with where we've come out on that. We're happy with what we've been able to do. We went in with a strategy, right? We went in with a strategy of what we're going to do. So when we convinced the bank to write the cheque to buy the Waypoint assets, we said, look, here's our plan. And we didn't tell all you guys what our plan was, but we had a plan. And John, Trey and the guys, Con and Simon, who are here, all did an exceptional job of implementing that tech plan. Now, with all that, what do I think? How do I think about the year? I think we had a strong 7, right? A strong 7. So I want to give the boys a bit of upside for next year to do even better. But it's nice to be able to have a grouping of assets where you're cost base is at a level where you can clearly make profits as you go along. And so we're delivering for the bank what we said we'd deliver. We'd like to deliver more, and we've got to, in doing that, we've been able to create an environment internally where we can go out and do a lot more, just straight off the bank's balance sheet. We don't go and need to raise that quite difficult external debt. We can do it straight off the bank's balance sheet. So a strong 7.
Okay, so if the market's better and more realistic than it was this time last year, hypothetically, if Waypoint was for sale now, would it go for more or less?
Do you want to ask them or me?
Anyone?
I don't necessarily agree that the market's that much better. I think that's a fundamental position. I think there's no doubt that it hasn't got any worse, but I wouldn't say. I look around and I see the level of assets that are sitting on the ground. Right, there's an oversupply, and there's still players able to step in there and lease assets out at rates that are just not right. I mean, we've got assets in Mexico. We have people come in to lease 139s into Mexico, and they can lease them cheaper than we can lease 412s. Does that make any sense, right? So I don't really think, right? I don't really think that the market's where it needs to be from a lessor perspective. What's happened with the Chapter 11s through Bristow, CHC, etc., PHI. Is that the lessor community has been really squeezed, and Chris put up a good slide where he showed how much money he'd taken off us, right, as lessors. It hasn't been a great year in relation to where we want to be from a go-forward basis. But I think, to Bill, your point, I think that it's setting the scene for perhaps some better behaviour going forward.
Yeah.
So where would I think Waypoint would trade? I think it'd trade up for more because we bought it at a price and we've made money on it. So, frankly, I think it'd trade for a higher price.
Well, I think you've heard it. But I would say likewise, it would probably trade a bit better. It depends very much on the blend of, shall we say, unpopular assets against good assets.
Yeah, well, I think you're right. It may trade for more, but it would only trade to an institutional buyer like yourself or ourselves, because nobody could leverage that right now still, right? I mean, the capital markets for the asset class still remain very, very challenging. And I think even at the price that they traded for before, to lever that at 3-4 to 1, you wouldn't get capital markets financing for more than likely now. Certainly not given the quality of assets, the diverse quality of assets that was in the portfolio. So, I mean, I'd agree with Stephen. I mean, I think we're in a better spot than where we were last year for sure with the market from a leasing perspective. But I think that's because of the people that are here on the stage, are attempting to price the asset class rationally now. And I think what hit us really through the downturn was not just a catastrophic oversupply in certain asset classes, but even in asset classes where there wasn't a significant oversupply. I mean, thinking 145s, light twins, lease rates plummeted in that asset class because they were fundamentally mispriced. I think that mispricing is moving the right direction, and that's not just a transfer of value from the operator to us, because that's not how it works. I mean, what we need to do is transfer, that rationality of pricing through the operators onto the end users and reinflate end user contracts. And I don't think that has started to happen to any real success yet, but we're setting the scene, I think, for that to happen.
Well, I think the most important thing is none of us are going for growth's sake any longer.
Pat, you raised the question about finding finance and unleveraged, or finding leverage, and we've now got 2 parent-owned lessors who are not looking for funding, and we've got 2 in the middle who are.
So just to be clear, Al will take funding if someone wants to give it to us.
But is it, relative strengths, Crispin, of being would you rather be owned by a big parent and not have to worry about the bank market, or Bill?
Well, it has advantages, it has its disadvantages. The parents' money is not free, and they are basically looking, GE and presumably Macquarie are looking for a reasonable return on their financing anyway. But I think the most important thing, and this is something which we haven't yet got to in this industry, the helicopter leasing industry, is trading. And at the end of the day, we need to have liquidity in this market. And the liquidity is going to have to come from the banks. So, even if you've got, as we found out with ILFC and a few others, if you are big and you've got parent funding and very little third-party funding, it's difficult to move the market.
Yeah, I'm a bit confused, Crispin, because, you talked about, kind of the parent Macquarie or GE, will want to return. Does your debt not want to return? You're getting it free?
That's
I
what
was
I'm
just trying to
saying.
understand what the difference
No, the question was, is it more comfortable having a single source of funding from the parent?
Well, it's always good to have funding.
Yeah,
I think that's fundamental.
But the point I'm saying is that when you come to trade and you're dealing with other third parties that are going to be reliant on banks, then we're already in the bank market. There are a lot of people that are not.
Yeah, that's just, that's just transferable
trade.
debt, right? That's just transferable debt.
Yes and no, because the important thing, we are talking at one stage about return on assets. You'll only get a return on assets when you sell the asset. You will get some cash flow, yes, fine, but
Whether you sell the asset to another lessor, or
when you
sell it to
exit an asset.
Yeah.
So to me, leasing is the whole position of a trade.
Sure.
That's the way it goes.
Phil, Jonathan?
I guess our perspective on this is, and this is something that continues to worry me, is that there are two guys on this stage who have not necessarily had to come to a reckoning with the assets they bought in the past. And I'm talking about Pat and Stephen, because we do have external capital markets folks that we have to be accountable to, and look, we're happy to talk about this in a broad general fashion. At Lobo, we took the pain that we had to do to recognize what has happened in the marketplace. I worry about at what point in time Pat and or Stephen have to actually recognize the pain that Crispin and I have to deal with, because we have shorter dated capital. And while you could argue that necessarily that's not the same thing, but you're playing in the same marketplace as we are, and you can be patient. But that's a view, and again, back to Crispin's point, that's a view to the future, but at some point, the future arrives. And so that's
I get that, and I think you're right, but I think one thing, and I'll differentiate Macquarie from this, is at the end of the day, we took someone else's pain, right? There are a whole bunch of banks got toasted. When we bought Waypoint at 40 cents in the dollar, right? The banks got the returns that they didn't want to get, right, out of that. So you're right, but at the end of the day, it's, I think just because you've got access to a balance sheet doesn't make you any less careful. It doesn't make you any less accountable. You're exactly, in fact, in many ways, you're more accountable, right? Because you're reporting to the, you can't play the smoke and mirrors game that Ed and the boys played in relation to Waypoint. Sorry, Al. In relation to what, have they bluffed the banks for so long, right? In relation to what went on, we can't do that. We have to do it internally.
All you have to do is October 1st, and then you're fine.
I think from our perspective, for me the biggest advantage is not particularly just having the availability of capital. It's the flexibility you have when you don't have big syndicates of banks to deal with. I mean, one of the biggest advantages we had when we went into the challenging processes with both CHC and Bristow is, as we went in to negotiate our deals, we had 100% full delegated authority to our team to go in and cut the best deal that we thought we could get without having to worry about back lever.
Although Lobo did a great deal with CHC. You cut a deal with CHC very quickly.
You mean in the bankruptcy process? Well, because we were the little guy, otherwise we were going to get squashed. Yeah. So.
And we luckily weren't involved.
A couple of 225s, I think, Crispin, right?
So?
A couple of 225s.
We don't talk.
Yeah, but that wasn't exactly what you think it was.
That's where you hand the keys back to the bank and say, sorry, I tried really hard, it's your bloody problem, not mine.
Well, I can't talk. Well, the LCHC, shall we say, it was a structured deal. It was helping them.
Okay. I think there's just so many undercurrents.
We're in the last slot. We've got to keep it interested.
We're in public. Okay, let's talk about as a lessor. You don't really ever know what a deal returns until you sell the asset. Would you agree with that?
Yeah, that's what I said. You have to go through the entire life. Exit the aircraft or exit the asset.
I actually don't agree with that.
Okay.
I'm going to talk Stephen's book here a little bit. You know it when you buy it. and it's an adage for a reason in asset investing. You make your money on the buy, and most of us bought assets before the cycle turned. Stephen bought a bunch of assets way after the cycle turned, and so he has a better prospect of making it. But of course, you don't know it, but you've got a lot better feeling for it when you're buying assets for pennies on the original cost and even pennies on the market value.
You have to buy right. I mean, that sets the entire deal, but the exit is in relationship to your entry price. So, you could end up buying a cheap asset in a shit market, go through a good market, and then end up trying to sell at the bottom of the cycle again. I don't know what...
But you've got, from asset purchase and buying the right assets at the right price is obviously critical to start with. But from our perspective, we underwrite the asset to hold it, full stop, through its life. So you've got to, when you're pricing that asset, you're not pricing it to a residual value at the end of 5 years or 7 years. You're pricing it to that lease, plus the downtime, plus the transition costs, plus the estimate for the next lease. And then, as Corey pointed out, we're underwriting this stuff to 25 to 30 years of life. If it turns out that they don't have 25 or 30 years of life, then we fundamentally mispriced that lease, and there should be 2x what we're currently charging for new money. But ultimately, I think Crispin is right in one respect. There's a different, people look at yield on our asset class versus yield in other asset classes that are comparable, like commercial aircraft, and on a strict LRF basis, it's probably not bad, but the risk adjusted yield is way off compared to commercial.
Yep.
And one of the reasons for that is there is massive liquidity in commercial aircraft and there's very little liquidity in this space. So you can't underwrite to trade because you don't know at what point in time you're going to ever be able to trade out of this asset class.
Anyone else want to comment on risk-adjusted yield?
I just think you've got to be in it for a long time and work it hard, right? And if you're bought right, then hopefully you'll be okay, but you don't know.
But it's not really a business you can flip in and out of because, the troughs are deep, and as we've seen this time, and there isn't enough buyers out there. I mean, commercial aircraft are trading hundreds to thousands of aircraft per year in various different forms, and ABSs and securitizations and capital markets trades. Here we just don't have that. So you can't underwrite the asset with a view towards flipping out of it in 3 or 4 years' time. You've got to underwrite it to hold it, and you've got to build a platform that's able to manage it.
Yeah, but you're exactly right. Pat, I guess the issue is kind of Jordan did a good job in relation to flipping Milestone, right? It's a timing question, right? It's not about being better. It's a timing question as to when they flip.
There are times where you will be able to trade out, but I don't think when you're investing in an asset or a platform, it's take a big man to be able to predict when those cycles are going to move. So you've got to underwrite on the basis that you're holding onto them.
But also, this is a very young sector as well. We must remember, this has really only been going for 7 or 8 years now. And, if you look at the fixed wing market, when we started in 85, 92, we still weren't even trading between lessors. I mean, this is still a very young sector. It's an established industry, leasing aircraft, but for the helicopter side, it is still new. And we are coming off a massive downturn in this business. With the oil price, the 225 crash, the CHC bankruptcy. I mean, to have 3 major body blows in a young industry, I think we're doing pretty well.
The one thing I want to add to this, and it's a little bit ironic that I'm going to say this because I'm from Texas, which is the land of, dear God, give me one more boom, I promise I won't waste it. And so what I'm about to say, but the thing that's interesting to us is when we started investing in this sector by value, not by number, about 75% of helicopters by value were in the oil and gas industry. The interesting thing, we're talking about the cycle. The question is this a cycle or is this secular? Because when you have Fink, the head of BlackRock, talking about how the biggest institutional investor in the world is going to start doing environmental climate conscious investing, and you're talking about 25, 30 years on these assets, and still, even at the depressed values where values are today, which they used to be 75%, they're now like 60%, not because there's fewer helicopters in offshore oil and gas, but because that's where the biggest value diminution was, are we actually facing a longer-term wind down of this industry? And that's something that has to be in your thinking when you're investing in these assets today, because it's possible. I'm not predicting it, but again, boy, I hope there's another boom that would be good for us at Lobo, be good for everybody on this platform, but it's not for long.
I think if you look at the data that we were showing earlier in Corey's presentation, we view this, entire sector as, a medium to sort of long-term annuity bleed out solution.
Yeah.
But it is over 20 years, right? So it's not like, I don't think there's a shortage. We're not going to turn off offshore in the next 5 years. It's still going to be needed. It's still going to be there to meet demand. But I think the question is, if you were going to start investing in a 30-year asset, and you can be confident you're going to get maybe the first 10 to 15 years of that in a primary mission, if that asset, if the OEMs and the infrastructure around the asset class does not support that transfer into a secondary mission, then you've got to price it to 15 years, and that's a different price.
Yeah, correct.
But is anyone now pricing, do any of you think now's the time to start pricing to 15 years?
I don't think you can get away with it.
Don't get it.
Because there's too much supply right now. So the answer is yes, that's what you should be pricing to cover your risk. The problem is somebody's going to slip into Mexico and lease a 139 at a 412.
Well, I think that's going to be the case while we continue to choose to oversupply, right? That is the case. But if anybody in this room decides they want a shiny 160 tomorrow, the price of that 160 is not going to be what the historical price of a 139 was from a lease rate perspective.
Yep. And look, also, even new 139s, full stop.
Okay, so let's assume this is a cycle and not, otherwise it's going to be depressing.
Do we make the assumption that this is an industry first, that this is a real business? Should we start from the fundamental is the helicopter leasing community, is it a business? Or is it just like a bit of a rental that's, it's opportunistic? I mean, is it actually a bit, because we keep comparing it to the fixed wing, right? And this is absolutely not like the fixed wing market, right? It is really not like it. And as much as we would love it to be like the fixed wing market, there are some fundamental differences that really make it very difficult, right? To be a less or taking real asset risk over time. Right? It's just fundamentally different. So, kind of what have we got here as lessors? Is it really, you just can't compare it to fixed wing. That there's so many flaws with helicopter leasing to kind of pretend that it's all going to go smoothly. Right? It just doesn't work that way. As we've all seen, right? We've all seen through this downturn.
So, okay, let's go through those flaws, because I can see you could cynically go the difference between the fixed wing commercial market and the helicopter market is that the helicopter market's had its bust and the commercial industry is about to go into one, and we've all forgotten that there hasn't been a downturn in the fixed wing market. So it looks amazing. But, Stephen, you remember 92, you remember 2000.
Thanks very much. Yes, I do.
And it's very easy. And so what are the flaws? The flaws are what? The contract cancellation.
I think we've got to be careful just talking about the oil industry all the time. I mean, 65% of our fleet is in fact, actually more than that, it's 70% is non-offshore oil and gas. And so
it'll be 80% by the time we finish.
Sorry?
It'll be 80% by the time it's off the panel.
No, thank you. I mean, there is one other lessor here, Nova, Oliver Beer. I mean, his business model is pretty robust. It's all EMS.
This is why he's not on the problem.
Yeah, absolutely.
That's not how it was titled when we got the email.
That wasn't in the agenda.
Yeah, but I do think that we have to sort of, don't get the oil and gas market, without doubt, is the most important market. But at the same time, we've got to re-educate all the stakeholders here, especially as we're going through a technology wave now. I mean, the second generation, the 76s, 412s and so forth, will have their time, and that's it. And, if we're going to have discipline in this business, which I do like on the OEM side, there is none of this what I call transatlantic rivalry between Boeing and Airbus, who's actually got a larger order book, who's sold more aircraft, who's delivered more aircraft. We actually have quite a mature OEM business that is able to switch production quite quickly. And as long as we're carrying on this way, as the demand increases for new technology helicopters, which will come, I mean, you're seeing this in IGP today, then I think we should be able to get a more balanced, fair share of everyone taking a risk and getting a reward.
Okay, to go back to Stephen's question, Bill, is this a real industry? Helicopter leasing.
We've never thought it was. We think that a lot of the reason why we're sitting here with a big problem and an oversupply is because the analogy to fixed wing leasing was overextended, and a lot of people on this stage took line order positions, which again is analogizing back to the fixed wing industry, and we thought that was a big mistake, and we think that's what led to a lot of double counting of in demand. And so we view this as a niche investing opportunity. And again, I'm giving kudos to Stephen because he had the balance sheet to do it. And you come in and you make a good buy when you can make a good buy.
He also placed a speculative order, though, let's not forget.
Yeah, we've I was going to say fucked it up, sorry. I stuffed that up too.
So the answer is no, we don't think it is, and we don't think it's a growth industry. We think it's an opportunistic investing industry.
Pat, are you an opportunistic investor?
Well, we continue to invest, but I mean, I'll echo the point around speculative orders. I think at the time the view was a spec order gives you a similar type of advantages that a spec order gives you in traditional commercial aircraft. In traditional commercial aircraft, when big lessors do big spec orders, they get significant discounts with the economies of scale, and they lock up positions. In this game, it turns out that despite the fact you think you've locked up positions, they always pull one or two out for whoever walks in the door. So there's pretty much zero value in taking the risk on the speculative order because the OEMs miraculously produce line positions. And the amount cut off the top and the front just doesn't justify the risk of taking a spec order. So I'll hold my hand up as well. I mean, I think the level of forward ordering done got it wrong. I don't think it was anything close to the root cause of the oversupply that we had. But I do think if it was, they were not good economic choices at the time.
Crispin?
Yeah, I mean, to a certain extent, I agree with all the above. I mean, I'm lauding the OEMs as far as the sort of lack of what a silly competition, but certainly I agree with you that there is no benefit in having a speculative order book. I mean, after exuberance and after a good party out, there's a big hangover, and that's what we've had at the moment in this industry.
Okay, do we have any questions from the audience? Okay, one of the great things about hangovers is that they do end. When is this hangover going to end? Stephen, last year you said you said it was relatively easy to plot. You can look at the oversupply, you can look at absorption. Does anyone have a view that when the hangovers are going to be over?
Well, I can say that the hangover is beginning to clear on our side, but we are primarily
started drinking again.
Yeah, that's right. Yes, I've had the hair of the dog here. No. But I mean, we are seeing a positive trend in what I call the medium market aircraft, the 139s, the 169s. Even the super mediums are beginning to pick up a bit now, and luckily, and I remember Bill, you telling me that I will never grow until I actually got 225s and 92s. Thank you for that advice. We have actually got 392s in our portfolio now, but I mean, there is a positive trend line, I think, in the popular types, and there is a negative trend line in the unpopular types, but it's faring around quite a slow recovery, but it's positive.
It's a slow recovery, but it has to recover, right? It has to recover because, I mean, at the end of the day, I mean, how many of the OEMs are going to go out there and how's Sikorsky going to go selling a 92 at 30 million bucks, whatever it is, right? How are they going to do that, right? They can't, right? And because they can't, unless they're selling it to Donald Trump.
Where's Dave?
Well, they can't, right? It's very difficult, particularly to where people actually want to actually have them operate and what they want to pay for them to have them operate. So it's extremely difficult. I like Sikorsky, right? But at the end of the day, it's tough. It's tough to go out and do that. And but what that does is it means that over time, the oversupply has to come in, right? And I think we're going through that now. So to answer your question, I think we're going through it. Just how quickly.
But what can derail it or slow it down is more aircraft, right? The last thing this industry needs for the next 12 to 18 months minimum is more aircraft coming in. Because if we're not chewing through the oversupply and we're facilitating new aircraft coming into the system, that's going to prolong essentially that supply hangover, and we're never going to get back to where we need to get back to.
Yeah, I'll tag on to Pat's comment. The alcohol in this instance was capital, and I'm assuming that GE and Macquarie are not dumping capital in. As much as Crispin and I would love for the banks to come back, I think right now the surest way to get fired at a commercial bank is to go into your credit committee and say, "Let me show you this helicopter deal I've got." So the good news is that there's not more capital coming in, and if you watched what went on in the bankruptcies this past year at Bristow and PHI, a lot of alternative capital came in to fund those emergencies. It was very expensive capital that came in, and that's good news because that expensive capital is looking for a good return, and the worst thing that could happen is more alcohol, more low-cost capital that will inflate the supply again.
Yep.
Okay, any questions from the audience? we've got or comments. Ed, would you like to say? Comment. OEMs can switch production to defence whilst there is a market for military variants, but tech is reducing that sector.
What's it reducing the sector?
Tech is one of the theories that tech is reducing military. I think drones and... Any comments on that?
Well, I mean, if you just go through the asset types, let's forget the 225, which has had a remarkable recovery in full marks to Airbus for switching production and actually believing in the aircraft and convincing everyone else. The 92, I'm afraid, is stuck. It's offshore oil and gas search and rescue and very little else. But when you move down, and also to a certain extent the super mediums are in exactly the same position. But when you move down to the liquid 139s, 169s, 145s, 135s, they can switch to and fro. I think that, they can turn the tap on and off.
I think we'll take some credit for rebuilding the.
Thank you very much as well. Yes.
Question from Mr. Nakayama.
Crispin already talked, but I would like to ask all of you, the 225, what is the current, redundancy, and how the 225 can be, market can be finding its sort of, homes, heavy lifting or firefighting, and the price, such as low priced a few years ago, is gradually coming up. How do you forecast in the coming few years the market or the price of 225 will be? May I have your comments?
Pat, do you want to talk about it?
Well, I mean, it's transitioned to a secondary mission. So effectively, the 225 is no longer operating in oil and gas. And whoever was first movers moving
That
those.
means come back to the offshore market again?
We think it won't come back into offshore. There's no requirement for it to come back into offshore. We've pretty much moved the bulk of our fleet out of oil and gas configuration and into configurations for different missions. So, the first movers there got good value. Price has been ticking up, but, by definition, that mission caps out at a certain level. So I think what we would say is supply of 225s is starting to tighten up for people who want it in that mission. And there's one big trade in the market. Once that closes, that's a lot of 225 supply that's going to, come out there and move into alternative missions. And then after that, it's just going to be supply-demand. But the mission that it operates in is capped out at a certain level, and what the operator can pay for the mission, that will determine ultimately 225 valuations.
To which level of the price do you expect?
You'd like to buy one off him. How much are you going to pay?
So we can sell them. We've got plenty of them.
Thank you.
Anyone else comments? Okay, nice question from the audience.
Thank you.
Thank you. When offshore was popular, lessors were not looking at EMS. Crispin, I know you're going to argue that with that. Now they do look at EMS. Why are they not looking at the VIP market?
They do look at the VIP market, I think.
But why are you not looking at the VIP market?
Well, sorry, we look to sell into it.
Yeah.
That's the logical place to.
But not lease into?
We sell into it as well. I mean, leasing to VIPs is more analogous to corporate jets. It's it's a very different type of market. It's not one we.
It's a financing, right? It's not a leasing market.
This is not a workhorse market for us. I mean, we're looking for workhorse aircraft.
Okay. Bill.
Is that all you got on that one, Al?
Sorry?
Is that all you've got on that one?
On that question from the audience, yeah.
Okay, great, thanks.
I'm just reading the questions. Okay, who on the panel? Stephen, you can go first. Do you regret going into the helicopter market? And that's my question.
Oh, that's a new one. Do I regret? I guess the answer now is very clearly no, right? If you'd asked me a couple of years ago, the answer would have been a very clear yes, right? Regret because of the timing of we went into the market, what we acquired. We had a small number of orders as well, which we've all talked about. We made mistakes, right? We made mistakes but didn't recognise how tough that market was going to get. We did not analyse it correctly in the sense of how bad it was going to get. So the answer was a couple of years ago, yes. And what we did is we put put the business kind of into lockdown. We mothballed it. Petco and a small crew kind of really worked the assets hard. You know, we ran a couple of years of small losses. We didn't like it because we sit on a bank's balance sheet, and banks don't like you making losses. So yeah, we put up with that. But then obviously we were sitting there waiting for opportunities to come out of the downturn and the distress, and that's why we stepped into as you guys all know, we stepped into the Waypoint situation. So as we sit right now, we're making money, right? And so it feels much better when you're making money than when you're not making money. So yeah, it's okay.
Pat?
Look, I mean, I
Talk
think
as GE here.
as opposed to personally. Look, we got the timing wrong. We overpaid for the platform when we bought it, but I think at that stage, you know, once we bought the ticket for the cinema, we're going to go in and watch the film. And I think, you know, what we paid is sunk. And now we're focused on being the biggest player in the industry with the scale and probably the best platform. So I think we regret what we paid for it. I don't think we regret getting into the space.
Just timing, just regret when we got in and invested. It's still an interesting space. And in fact, right now, we think it's as interesting as it's ever been to deploy capital at the right price.
Yeah, I mean, I actually slightly disagree with Cookie here.
For the first time?
For the first time. Good. Because, I mean, how were you going to know that the oil price was going to collapse? How did you know that the 225 was going to be
Just quietly, Crispin, I didn't.
Oh, you didn't?
That was the problem.
Yeah, but that's
the problem
fine.
is that I didn't, so I know I couldn't, but that didn't mean I didn't make a mistake. We didn't make a mistake in relation to how we tested the market. We didn't realise how hard it was to repurpose helicopters, right? Helicopters are a pain in the arse when you want. It's not like the fixed wing market when you get a 737 back and you want to move it from, you know, Angola to South Africa. It doesn't matter, right? You can do it, right? Yeah. You can do it quite efficiently and you can do it quite quickly. You can't do it with helicopters. You can't repurpose in the same way. The OEMs are not set up to do that. So we learned a whole lot of lessons that we thought we'd looked at and we thought we'd had the right answer to, but we didn't.
No, I think you're absolutely right on frictional costs there, but certainly as far as analysing the future is concerned, we're living in an uncertain world. I mean, if you talk to somebody in the fixed wing market 6 months ago, let alone 12 months ago, everything is hunky-dory. Now, of course, you're seeing the complete drop in traffic. We are exposed to the elements. But, you know, frankly, we have gone through what I sort of jokingly call a global SARS, oil price, 777 being grounded, and I don't know, call it what you will, Lufthansa going bust. I mean, you know, we've gone through that and we're coming out the other side now.
Lufthansa, BA and American going bust. Any more questions? Great. Chris, you're a negotiator.
No, I was just going to ask. I think
I'm not dropping lease rates anymore, Chris. No more.
Fair enough. Credit was given earlier, at least partial credit, to the OEMs for their discipline on production, which I think is fair. How do you view market segmentation and the number of models? And as the largest buyers of aircraft, what's the feedback that you're giving to the OEMs on new models?
Well, I mean, I think Corey put it very bluntly this morning. I mean, you know, we do believe there is demand in the future, which will be predominantly replacement demand for as the 92 ages out of the heavy space. That's really going to be the driver of super medium. But, you know, when you've got a market segment that's, you know, oil and gas, 210 aircraft in 92s, you know, 300 all in, divide that by 4, that equation doesn't work for economies of scale for anybody in terms of an investable asset. And then you look at something like the 189, which is a segment of that, and has a belly tank, non-belly tank, and 2 different engines. That certainly doesn't work in terms of an investable asset, because as Stephen said, you know, even if I just happen to have the 189 in the right configuration rolling off at the time that operator number 2 needs it, and he's operating the different engine, probably doesn't work either. So I think the feedback we're giving to the OEMs is that there is not enough space for 4 super mediums, right? Whether that's a 525, 189, 175, and ultimately a 92 A plus or B. That doesn't fit into a total replacement demand of 300 units. And I think collectively as an industry, we've got to decide what product we're going to back, and then the financiers will back that. But that's up to you guys and the operators in the room. You've got to figure out which is the right product to service the customer needs, and then capital will flow in behind it. But capital will not flow in behind something that, you know, doesn't have enough scale to allow us to move that aircraft across multiple operators and missions.
I agree, absolutely.
No, I agree. It's just too many types.
Okay, any more questions? Okay, we'll end with a couple of fun ones.
Define fun.
These are, okay, if tomorrow you had to go and work for a different lessor on this panel, which one would you choose, Bill?
Waypoint.
Nova Capital.
On this panel?
I'll work for Cookie.
We'll see one day.
Okay. What are you going to score? So you're going into this year more optimistic than last year. Is that fair?
Before coronavirus, yeah.
Before coronavirus.
Yeah, more optimistic this year.
You're more optimistic.
I think things are reasonably calm, so I'm comfortable with where things are looking forward. Yep.
One of the reasons I think people are optimistic is consolidation. Chris just took us through this. But are you guys just being lazy, taking from the fixed wing market where consolidation has sorted out US airlines? Are we all just seeing consolidation of operators as a solution because it's worked for North American carriers?
I'm not quite sure I understand. Just to be clear, consolidation can be a good thing. It's not necessarily a good thing, right? He's sitting over there, right? But with what ERA has done now with Bristow, I see that as being a very solid consolidation play. Now, if you'd put, be careful, I'll offend someone in the room, but if you put two other operators...
I think you already have.
Yeah, I probably have. But I'll try for everyone then. If you put two other operators together, that wouldn't make as much sense from a consolidation play, right? So I can see where the proper synergies are there, that it makes sense. And Chris alluded, kind of went through for all of us actually how they'd work through it and saw the synergies. So consolidation by itself doesn't give you the answer, but it can be a tool to try and
Yeah, I
solve
agree.
things down.
And I think, look at as Stephen said earlier, I mean, I'm loath to do comparisons to fixed wing because it is not the same. I mean, when you saw the North American carriers go through Chapter 11 and fixed wing, they addressed a hell of a lot more than our guys were able to do. You were able to take on labour, you could go to union costs. There was a huge amount more that you could do other than clean up the balance sheet, which is generally what the Chapter 11s we've seen happen. And then, they're geographically located in the same place, which allows them to then drive price and synergies into that market. That's not the case with the global operators we have. They still have local operators that will compete against them. So I think, consolidation can be a tool to help, and I think the costs that ERA are talking about in terms of those synergies around physical infrastructure, bases, etc., that's all good. But just putting two operators together in consolidation for the sake of consolidation isn't going to fix the space for sure.
I would just like to follow that point. I mean, I agree with both of you, but I do still feel like, as a shall we say, European or a Brit, I really resent Chapter 11. I really resent Chapter 11. No offence to Chris, you came out at the other end. It's not your problem. But the point is,
he didn't have it.
Yeah, I know precisely. I'm just saying, you're the forerunner of your joint partner, and the same with CHD and everyone else. It's let's just throw the problem to somebody else, and we'll come out the other side. It's destabilising on the operator market as a whole. And at the end of the day, we service the operators, and so as Stephen says, he takes a bath from Bristow. I mean, fine, you're big enough to do that, but in more ways than one. But the point is that it's, I think, iniquitous.
Mate, we stepped into a Chapter 11 situation, but what a pile of crap. The Chapter 11, the whole debtor-friendly nature of it, it's just crazy, right?
Did you say that to the judge? Okay,
I would have liked to.
Final advisors make money in Chapter 11,
and we're hearing from some later. Final question: we've seen Waypoint trade. Does anyone expect any one of the four people up here? Do you expect any of your colleagues to be sold?
3 of the 4? Did you say 3 of the 4?
No, any of them. Do you expect any of the ones?
I thought you said did we see 3 of the 4 trading? No, it was just 1 of the 4. Okay.
Do you see Cookie?
Well, sorry, I just answered it.
What? Do you see changes of ownership from any of the people on the panel in the next year?
That's a tough one, Pat. What are you allowed to say? I said that's a tough one, Pat. What are you allowed to say?
Anyone got $5 billion?
That's a good answer.
Yeah.
Okay.